Quick question. Who's more important for your business? Is it your CPA or your bookkeeper? Well, it's actually a trick question. It depends on what you need. So today here, as part of our Q&A, I'm doing a quick little presentation on what does a bookkeeper do and what a CPA does and kind of the difference for you and your business. So in the next 5, 10 minutes, we'll kind of go through a couple bullet points and really kind of track that. And then if you have any questions at the end, please let me know and we'll kind of talk about that. Does that sound good to you?
That's great. Thank you.
Awesome. All right, let's get into it. First, we're going to start with what a bookkeeper does. Here a list you see is first, they track daily financial transactions. This includes all income coming in to bank accounts. They also include the big one is tracking all your expenses of money going out, and this could be coming from multiple bank accounts or credit cards, and they're tracking where all that money is going and actually categorizing it and what we call coding it into the proper accounts that it goes to. And also, they can help track all the receipts with that as well. So if you get digital receipts from, say, an Amazon or from a major vendor that you're working with, where large expenses, especially with large expenses, you can send those to your bookkeeper and they can help track those. With the bookkeeping software, they can also, upload those receipts so that you also have a digital copy along with any paper copy. Again, I mentioned this before, but categorize these expenses, reconcile the accounts, and keep your books clean. Kind of talking about the books. So back in the day before the digital era, the bookkeeping was actually maintained by literal books where somebody was actually annotating and tracking all the expenses and call what we call a general ledger. And they would track all these things and calculate all these numbers and maintain literally a book. And when they would close the books, when everything was all done and making sense, they would literally close the books and file that for the next year. So when we talk about your books or what a bookkeepers, we are a keeper of the books, of maintaining these records. And in those records, we're categorizing all your expenses and reconciling your accounts. Real quick on what reconciling means today in today's modern era is that your bank or credit card company gives you a statement. And so at the end of the month, they say, in your checking account, you have X dollars. And on that statement has all the transactions that got you there. So here's your starting balance, your ending balance. You might have seen this. Well, for bookkeepers, we want to reconcile by making sure that what I am seeing, either in my accounting software or my spreadsheets or however I'm tracking my expenses, that we actually are matching with what the bank or credit card is saying. So if the bank says you spent $1,500 last month and you got, 2000 in revenue, then I go look at my records and I go, yes, those amounts and those transactions match. So we want to reconcile that. It's very possible to duplicate things, to miss transactions. And that's why sometimes you might see, especially in QuickBooks Online, why your account balance might be really off, literally sometimes hundreds, maybe even thousands and thousands of dollars being off is because there might be duplications or things that are missing. Next is providing regular financial reports. So one of my duties I do with my clients is that not just tracking the data, but then I also help generate the financial reports. Now in QuickBooks Online, I can make a whole bunch of different reports, but the big ones that most people like to have is the profit and loss or income statement. Basically going, here's all the money you made, here's all the money you spent, and what's your final bottom line at the bottom. The balance sheet, which for some entrepreneurs and small business owners might not be familiar with, is that is a snapshot of your business on a certain day, usually at the end of a period, end of the month. So say in this case, we just had the end of the month was yesterday, March 31st. So we want to see what were your account balances? Well, how much did you have in your bank as of March 31st? How much did you owe on your credit card as of March 31st? How much have you invested into the business as of March 31st? How much you've taken out? And so it's a snapshot of the day. So that's why it's a difference between the balance sheet is a snapshot of a single day, where the profit and loss covers a period, a time frame. How much did you make or lose over a month, over a quarter, over a year? Big difference. Does that make sense? The difference of a
Yeah.
snapshot to a time period.
Yeah.
Next thing that I do is I keep your organized year round, so tax season isn't a mess. It really makes it easy once you've done it and good bookkeeping. And with my clients, it makes tax season like, all right, we have a couple of quick questions. I can generate reports really quick. And we just keep operations going really smoothly without having this huge interrupt of like, all right, I need all these records. I need all these statements. Where's all the receipts? And we're spending, we could do this, do a big cleanup and spending, a couple weeks trying to get everything figured out. If everything's all done, then it's just like, all right, need those reports. Let's answer a couple questions, just double check a few things, and we can be ready to file taxes literally within minutes. So it's one of the big things that I like to do and really encourage my clients to have. Last kind of point, think of your bookkeeper like your business's financial organizer. We're just keeping everything organized for you, right? So, because when everything's organized, then it makes the CPA's job a lot easier. So let's talk about what the CPA does. A CPA, a certified public accountant, they're actually licensed and formally trained in advanced accounting. They know a lot more of the advanced intricacies of tax law, understanding how more advanced strategies as far as larger tax implications and how the tax system works, right? So therefore, they can prepare and file the taxes, right? So let's talk about what actual preparing and filing that is. Preparing means actually collecting all those documents, these financial reports, all your information, your personal information, and they can prepare all those paper documents that everybody, most people hate to do, right? So they can do that. They fill in all the information and then they can actually help file it. Filing it actually means sending that in to the IRS or to your local government for to file for the records, right? It doesn't mean they pay your taxes. They just do the paperwork and file the taxes. Now, with the filing, we'll include, all right, we filed your stuff. Now we need to remit and pay X amount of dollars. Sometimes when you file your taxes, after they prepare it, do all the numbers, and they file it, sometimes you actually might get a return. You file it, and then the government goes, okay, thank you. You filed it. Here's your tax return. So that's kind of one of the big functions that they do. They also can offer tax planning, compliance, and financial advice for you personally and your business. Now, there is a difference. There are, corporate CPAs working with big corporate businesses. There's also CPAs who just specialize working with personal taxes. And there's CPAs who kind of work with specialize in small business taxes. So when you're looking for a CPA, ask those questions like, well, what is your specialty? What is your background? And if they are not really familiar with small business taxes, then maybe it might be time to find another CPA and ask them, hey, do they know anybody who else specializes in small business taxes? Because they can offer with those tax planning, make sure you're staying compliant and offer that financial advice. CPAs can also help with audits. They can, actually, since they're licensed and all those things, and they're certified, they actually can represent you in court or with the audits or with whoever may be asking, and they can talk on your behalf. They also can help with financial forecasting, looking at longer term numbers, and then offer high level strategy to really kind of maximize what you got to do for each quarter and for over the year overall. Just think of your CPA like the financial strategist and tax expert with your business. So let's look at the key differences. So me as a bookkeeper, I'm that organizer. I'm the financial organizer. I'm tracking those day-to-day expenses. I'm helping prepare those monthly reports. I'm keeping your books, as we mentioned before, clean. And we're just helping you stay organized with all your finances. Some businesses can really have literally hundreds, maybe thousands of transactions, invoices, accounts payable, accounts receivable. They might be having a whole bunch of fixed assets and just a lot of equity and liabilities that they're just trying to track. So that is what the bookkeeper can really specialize in. Where the difference is the CPA, they are doing tax prep, they're doing tax strategy, they're more specialized in taxes. Me as a bookkeeper, I do not specialize in taxes. I specialize in the actual financials and the numbers. Whereas CPAs is your tax person, compliance. They can give tax and legal advice on that side, and they can help you stay compliant. And I hope that makes sense between what the difference between a bookkeeper and a CPA, because it's one of the most common questions I get when people ask me, "Oh, you have DBR bookkeeping. Do you do taxes?" No, I don't. I help prepare you for taxes. I can get all your help stuff organized so that you can go to your CPA with your documents. Your CPA will ask you for these documents, right? And that's the relationship between have a bookkeeper and CPA. Why you may need both. A bookkeeper gives you your CPA clean and organized financials, which therefore means fewer errors and lower tax prep costs. Let's talk about these fewer errors. One is if you don't track all your expenses, then that's an error, and you could be potentially overpaying in taxes. So we want to reduce those errors as much as possible. The same thing goes with reporting, tracking your revenue. We want to make sure that your proper revenue numbers are all tracked. And also with any of your fixed assets, any of your liabilities, any of your accounts receivable, we want to make sure that these are all accurate for your CPA. And then the next thing is lowering your tax preps costs. So yes, it does cost some money to get your books cleaned, where you're asking a bookkeeper to go through 12 plus months of financial records, and that can literally cost thousands of dollars sometimes. Now, if you were to go to your CPA and ask them to do the same thing, your CPA will charge more per hour and more for those costs. So you might give your CPA, hey, I just need you to do all my stuff. And they're going to charge you sometimes a pretty hefty tax bill to get all that stuff cleaned up. And well, you can save costs by using both. So maybe having a bookkeeper can help maintain them, clean them up, and then your CPA, you just pay them just to just file the taxes and just for tax advice, and actually can be really cost effective for your business. So, and then together, again, they can help you make smarter decisions and ultimately save you money in the long term for both your business and for you personally. My final takeaway, we are in tax season. It is April. But again, we don't want to wait until crunch time before you're thinking about your finances. Just make sure you're thinking about your finances on a regular basis, and then talk to the professionals who can help you, whether it be a bookkeeper, whether it be a CPA, or again, there's other financial advisors, planners out there that can help as well. This is part of the DBR Booking Online Community. We have a Q&A. We answer all your questions, and it's a great opportunity. And also, if you can always contact me to do a free consultation here with me with DBR Bookkeeping, and I'm Dr. Bryan Raya, and we're doing business right. So again, that's my presentation. I hope you had a good time, and I hope to see you guys later. Do you have any questions?
Go back up a little bit. Oh, on what a bookkeeper does and that sort of thing. If you haven't done anything with your books, for quite a while, where should I start? Start trying to put it into QuickBooks, or try to figure out my expenses and that sort of thing.
The big one to start is your expenses, because usually, most businesses spend money first before they actually make any revenue. That's just reality, no matter how big a business you have. Smaller level of entrepreneur, it's like if you to start, you don't necessarily even have to get QuickBooks. You can just go like, all right, let me get my bank statements, right? And number one, that's why they say separate your business and personal finances. Because if there's only one bank account or one credit card that has all your expenses, then it's really easy to go through and go, okay, I spent this much on for this, I spent much this for this, and you actually can input that and start categorizing your expenses. Does that make sense?
Yes.
Like that's
Yeah.
like that's the best way to do it. But what a lot of people do is like, well, I spent some money here, and then I spent some money here, and then I spent some money here. Well, that's why you're already setting yourself up for errors, because you're like you're gonna forget something. Oh, I don't know. Oh, I think I paid that with personally. And they're going through their personal bank accounts and they're trying to find those line items. Wait, was that personal or business? I don't remember. And that's where you get bad. So that's why number one is get a separate bank account. That's if you want to make it really easy, then you can or a separate credit card. Because then you're like, all right, on that credit card, how much did you spend for that month? You're like, oh, I spent $200. Really simple. And you can at least have at least the broader numbers, and then you can go and categorize more specifically into your accounts.
The other part of it, because I'm not making any money yet, I'm using personal money to pay off the credit card,
Yeah.
so to speak.
Mhm.
So how do you track that?
So the money, any money that goes into paying your credit card, or even that initial deposit that you put into your bank account. Say you put, all right, $1,000 to put into your bank account to help, pay for things and your expenses. Any money that you personally put into it to pay off a credit card or to put into your bank account, we call that an owner contribution. That's an equity thing. It is not revenue, right? It's not revenue. You don't want to be taxed on it,
Yeah.
right? So we want to track how much did you contribute into your business personally, and that's part of your balance sheet, right? And I talked about how much did you track, and a lot of people like, well, I don't know how much I put into my business. I just put money in your business. Well, if you really want to get accurate, you want to track that. Also, you can also track it as a loan. You can actually go like, all right, I'm going to personally give my business money and track that amount so that my business will pay me back for that loan. That's another way that you can track it as well. Either way, if you're an equity or as a liability, but that's what you do. It's basically an owner contribution or an owner loan.
But thank you. That's all I
Yeah.
had for right now. It's like I got to start at the beginning.
Yeah,
Okay.
yeah. I think the best thing to do is just like, just either create a bank account or a credit card that just really kind of like that does all your business expenses. Any subscriptions you have, change it to that bank account. And again, this can be a personal bank account. You just don't use it for other personal things, right?
Yeah.
It just, you can totally use a personal bank account as your initial business bank account. Just don't, you
Do it
know,
personal.
don't need anything personal. You have
Yeah.
control in it. You have control in it. And it's very tempting.
Okay. I can see that with I have two checking accounts. And one I had initially primarily set it up for business, but I have been using it for some personal. But it does have a lot of like subscriptions and stuff that come out of it. So I'm already kind of in the right direction.
Yeah,
Oh,
so those are like some initial steps you can do is just like, all right, this is the account that I'm going to use for business, and then start going through some of your subscriptions and just putting them all over that way.
move them
So
over.
in this case, if you have your school subscription, maybe you got, your ChatGPT or Canva or whatever little small little thing that you might be buying here or there, you can have that. So that way, you can know, all right, well, how much did I actually put into all of this, right?
If I've purchased another subscription on somebody else's school, is that also considered a business expense?
If it's business related.
Yes, it's educational.
Yeah, yeah. Any type of professional development, and that's towards your
Okay,
business. Any of that type of continuing education is all for your business. Any books you might buy that are for your business. Any type of webinar, any type of school community, any type of resource that you get to help you improve your skills is all can be a business expense.
okay, good.
Yep, all
Thank you.
those type of things. Now, the great thing about school is that, those charges kind of get, centralized. So wherever you're getting if you have a school community, then that wherever that account come is being charged, all your other school things will be charged the same thing. So even if you do a one-time purchase in a school community, maybe for a special
Of
course they
course.
have, or then that will all go to that. And if that's linked to the right bank account or credit card, then all those expenses are already, it'll be easier to track,
Okay. Yeah,
right?
I
And so
can.
for some people, they might only have maybe 10 transactions a month for their business. Like, and again, it's not crazy. It's like, okay, you can
No.
do that. And even over a year, you're like, okay, it's 100 transactions you have to categorize for the year, and it's not so bad. But that's why I recommend if you start getting over 50 transactions a month, you're starting to do some movement of money. Yeah, it's really time to get. And that's why I recommend getting QuickBooks Online. It's better. That's better to get all that stuff tracked better.
Okay. For me right now, I'm okay with just my spreadsheet.
Yeah,
Okay.
yeah.
Okay. Thank you. Very good. Thank you.
All, all right. Well, thanks for stopping by and showing up.
Yep. It was
Anytime.
good. Very enjoyed it. A few more things I learned.
Yep.
Thank you for doing this.
No problem. All right, then. Let me wrap this up, right? All right, thank you for showing up, and I will talk to you later.
Bye.
Bye.